Hey guys, what's up? PipSnipers here, back for another update. Let's take a look at pHEX over here. Very bullish on this coin, very risky coin for those who don't know. It's in the RH ecosystem, but it is, I would say it's a really good bet because considering how many times we've come down to this demand zone over here in green, every time we've come down to that level, we've popped up to this supply zone right here in red. You see, and there's no this price action is not random in any sense. Basically what this is just the composite operator buying at the troughs. So the composite operator, or the hidden hand, the market maker, they're the ones who create the lows and who set the highs, right? All they need to do is sell or buy, especially in a low liquidity coin like this. What we see over here is they set the lows over here. They buy at the trough, sell into the advance, right? Buy the trough, sell into the advance, buy the trough, and they sell into the advance, and they just keep doing this over and over again until they've accumulated enough coins. Actually, this over here was our was considered our spring. So now what you have over here is a range of about a year, over 365 days, right? And then you sweep the lows of that range right over here. And I actually remember this. When you swept the low, that was your manipulation event. That's when max supply enters into the market, because you have all of the retail who've accumulated here selling their bag to the hidden hand over here. And that's the perfect opportunity for them to accumulate because so much supply enters into the market. And I remember this when people were panicking so much. I was saying, no, don't worry. This is just manipulation and ending diagonal. And then we blasted off to the supply zone right here, topped out in around December 2024. And then we have a ABC correction to the downside, right back down to demand. Okay. Now, if you notice the wave 2, right over here, it didn't make a new low. It actually made just a slightly higher low at the 88.6% fib. So let me just remove these drawings so I can show you guys a little bit more clear. When we take a fib, from this low over here up to this high, you guys see how he came down to the 886? Right over here. Okay, came down to the 786, 886, and now we're seeing a push up above the 21 day moving average. Let's see where the 50-day moving average is. Okay, we're actually above the 21 and 50-day moving average now. So you may see continuation up to this supply zone, which would be sitting at 0.02 to 0.0239. Have a little bit of a retrace there for a right shoulder. We don't have to. We could just continue on higher and break through, but you may come down for a little bit of a retrace and then continue on higher to then break out of the macro accumulation range. Considering we've tapped this supply about 5 times, it's very likely that the 6th time will be a successful attempt at a breakthrough. And like I said, this over here was your spring. And after your spring, you have your initial advance or your euphoria, and then you come down for your test, but you make a higher low, and then you have continuation up. So here's what I'm thinking here for HEX on the macro perspective. This is either your A, your B, and then your C wave is a 5-wave move, and then you come down and pierce below this support in the bear market like butter, or this is your ABC, and this is your 5-wave move up, and you just come down for an ABC correction down to support for the bear market, and then you continue up for the next cycle. I'm in the camp of it not doing that, because I just think that it'll slice through this resistance here. And then it'll probably form a bigger structure, right? But we'll see as the time progresses, as the years go on. But so far, this is what I see here for HEX. If we did come up to that yellow supply zone there at 0.02 0.02 to 0.0239, then it would just be forming an inverted head and shoulders pattern, and then we would form a base and then continue on higher. Now, from an Elliott wave point of view, this is what it would look like. This is your wave 1, right up here. This is your wave 2. You have a wave 3 up to around the 2.618, 3.618, and 4.236 extension, found by taking a fib from the highest recorded price down to the lowest recorded price. Okay, so from peak to trough, come down for a wave 4, and then you have your wave 5. And with your wave 5, you'll likely overshoot the 4.236 just by a little bit. That's what I've noticed in crypto, and then it comes down like this. And this could also just be more extended as well, depending on how the price action plays out. But I'll make sure to keep you guys updated. This is the bearish scenario over here on HEX. So let's just delete everything on this chart just so I can show you what the price action would look like. It would, considering we hit the 100% fib, it could do something like this if Bitcoin flushes down. Okay, and form a bigger base like that. Or it can just continue on higher. But yeah, let's see how it plays out. Hope you guys enjoyed the video. If you guys have any questions, please feel free to let me know. Peace out. Take it easy. See you in the next.